If all your money's still trapped in the same 5 mega cap names, you're probably going to miss where a lot of the 2026 gains come from. In this video, we're going through 7 stocks to buy for 2026 before the crowd. Names that I think are massively mispriced, tied to real growth themes, and set up for serious outperformance as the next cycle plays out. Quick disclaimer, this is not financial advice. Treat this as research fuel and always do your own homework. If you're trying to be early on the next 12 months, not late on the last 12, hit like, subscribe, and let's get straight into the stocks. Markets have been rotating out of crowded mega caps and into smaller, more rate-sensitive names as interest rates start to fall. A lot of the companies I'm about to show you have already spent the last few years investing heavily in products and infrastructure. Their profits don't fully show that yet, which is where operating leverage and the 2026 setup come in. Let's jump right into stock number 7. Number 7 is Symbiotic, ticker SYM. Symbiotic is an AI-driven warehouse automation company. Robots, software, and systems that run huge distribution centers. Their flagship customer is Walmart, which is rolling this out across its network. They've got around $22.5 billion in backlog, roughly 10x current revenue, which gives you a long runway of contracted work. The big story for 2026 is operating leverage. They've already spent the money on R&D and deployment. As more sites go live, a larger slice of each new dollar can turn into profit. It's tied to CapEx cycles and can be volatile. But if you believe in warehouse robots as the next standard, Symbiotic is an under-the-radar way to play it. Number 6, NewScale Power, ticker SMR. NewScale Power, ticker SMR, is a bet on AI power crunch. They build small, modular nuclear reactors that can be factory-built, shipped, and deployed much faster than traditional nuclear plants. Their design is currently the only SMR certified by the U.S. nuclear regulator, a process that took over a decade and billions of dollars. With around $692 million in cash and no debt, they have room to execute in a very early but important space. This is high risk, high volatility, and moves on headlines. But if nuclear becomes part of the solution for powering AI data centers, NewScale is one of the purest plays. Number 5, Supermicrocomputer, ticker SMCI. Supermicrocomputer builds the AI server systems that all those NVIDIA and AMD chips actually sit in. Racks, cooling, power, and full configurations optimized for AI workloads. The stock has traded as if the company is in serious trouble, with a valuation that looks closer to distressed than AI infrastructure. At the same time, demand for AI servers from hyperscalers and big cloud providers is still ramping up. They've had accounting or auditor drama that scared people, but filings are in, compliance is intact, and the business sits right in the middle of the AI build-out. If execution is decent, I see asymmetric upside into 2026 from today's pricing. Number 4, Adobe, ADBE. Adobe is the creative software backbone, Photoshop, Premiere, Illustrator, and more. For a while, the story was AI image tools will kill Adobe. Instead, AI has made Adobe more central, not less. Their Firefly AI is integrated across Creative Cloud, making pros faster inside the tools they already depend on. They're monetizing these features on top of a huge existing user base, which is classic operating leverage. Valuation is much more reasonable than in past years, and if you want a steady compounder that benefits as AI becomes part of every creative workflow, Adobe is a strong candidate for 2026 and beyond. Number 3, Hims & Hers Healthcare, ticker HIMS. Hims & Hers Health is a direct-to-consumer healthcare platform built around online visits, simple experiences, and recurring deliveries for things like hair loss, weight management, mental health, and sexual wellness. It's a cash-pay, subscription-style model with high gross margins and predictable recurring revenue. Revenue, subscribers, and revenue per subscriber have all been growing, and the company has moved from burning cash to profitable growth, with a buyback program to match. It's still exposed to consumer sentiment and competition, but if you like healthcare businesses that act more like SaaS, high margin, recurring, and data-driven, Hims is one to watch for 2026 and beyond. Number 2, Salesforce, CRM. Salesforce is the cloud OS for enterprise sales and customer data. For years, it was criticized for overspending and weak margins. Now you're seeing cost discipline, rising operating margins, and strong buybacks funded by heavy free cash flow. They're layering AI assistance and and analytics on top of data that enterprises already store in Salesforce. They don't need to find new users. They can sell more to the customers they already have, who face huge switching costs. In a world of falling rates, predictable cash flows plus margin expansion plus AI monetization is a pretty attractive combo heading into 2026. Number 1. UiPath. Ticker PATH. Number 1 is UiPath, the leader in robotic process automation. They build software robots to handle repetitive, rules-based tasks across finance, HR, IT, and operations. This is not flashy consumer AI. It's enterprise automation with clear ROI. Fewer manual hours, lower costs. UiPath is deeply embedded across thousands of companies. And once automations are built on the platform, switching becomes painful. The stock was crushed during the rate hike cycle when IT budgets froze, but the business remains intact. Now, with rates easing and companies obsessed with efficiency, UiPath looks like one of the cleanest rate cut beneficiaries in software, backed by around $1.4 billion in net cash and a valuation that still suggests the market is underestimating its growth. So that's a quick run-through of 7 stocks I'm watching for 2026 before the crowd. Automation and AI infrastructure with SYM, SMCI, and Path, energy for the AI era with SMR, creative and enterprise software with ADBE and CRM, and the subscription-style healthcare platform with HIMSS. Use this as a starting point, not a finish line. Always check the latest numbers, your own risk tolerance, and never buy something just because you saw it in a YouTube video. If you found this helpful, hit like, subscribe, and let me know in the comments. Which of these 7 is your top pick for 2026? And what stock do you think I missed? I appreciate you watching, manage your risk, and I'll see you in the next one.